That's it. Right, they've let me into the Forex market preview this week, and I want to share with you why there's a very high probability that we're going to earn some money on the pound yen this week. And also I want to demonstrate to you why it's important to stick to your plan even after those losing trades. So stick with us and I'll see you in just a minute. Alright guys, so in this video I'm going to share with you why there's a very high probability that we're going to earn some profits out of the pound yen this week, and I also want to demonstrate to you why it's important that when these opportunities arise, if you take a loss, why it's important to stick to your plan to be able to generate profits out of the market still, regardless of that losing trade. When we see these opportunities set up that meet our trade plan, it's important that we let our trade plan decide when we get involved in a trade and not our emotions. And that is how you're going to generate consistent profits. Okay, so before we get stuck into the charts, I just want to go through the principle of a wedge pattern. Okay, we see these wedges. Wedges form in the market when there's a stall. Okay, there's a period of indecision in the market, and what we see is market starts producing these higher lows and lower highs and higher lows and lower highs, right? And what we see is market coils up into these wedge patterns. Now eventually we end up where price action coils up so tight to the tip of the wedge, and then there's a high probability that we're going to see a breakout. Okay, now wedges are bilateral. That means that it can break out in either direction, and we never know what the market's really going to do. And the classic way to trade these is to buy the breakout or to sell the breakdown. Okay, now if we break out, we're likely to test the highs. If we break down, we're likely to test the lows before we see any sort of support or resistance. And there's lots of different breakout strategies that allow you to get involved in the markets this way. Now, what if you don't trade breakouts? You know, what if you get a lot of rookie traders see this move happen, this breakout, and they start to buy it up, and they don't really know what they're doing. They don't know where their stop loss has got to go, and they don't really have any rules of managing that trade. And they think they've lost out because they've missed the move, or they've they've just watched as the market pushes down and 300 pips have gone, and they think that they're out of an opportunity. Okay, well, let me share with you what we're looking at on the pound yen. We've been monitoring this in the live room for quite a while now, and you'll see it's very similar. We've got our wedge pattern here. Market's been coiling up, putting in higher lows, lower highs, higher lows, lower highs, higher lows, and lower highs. And we're really tight in, market's really coiled up into this wedge pattern tip now. So there's a very high probability that this is going to break out this week. Okay, so do we worry about buying this up or selling it as we break out of the wedge? Well, you may do if that's your style of trading, but for me personally, I'd like to see this break out, because once I see it break out or break to the downside, I know I've got lots and lots of opportunities waiting for me that are going to provide me with a high probability trading opportunity each time. And I also know that every one of these high probability trading opportunities is going to allow me to win more when I'm right than I lose when I'm wrong, meaning that my profit target is going to be bigger than my stop loss or my risk. Okay, so I'm going to go for a few opportunities here. I don't trade off of the dailies, but I'm going to give you guys that do some potential opportunities here. So if we was to break out to the upside, we've got a bearish Gartley waiting for us up at 147.04. Okay, so 147.04, bearish Gartley. If you trade off of the dailies, what I really like about this is when we said that if we break to the upside, we're likely to test this high. Well, that completes right at the high. Okay, so if you was to get involved at 147.04, your stops would be nicely protected above this previous high, and you'd be looking to short this for 382 retracement or whatever your targets are on this. I don't trade off of the dailies personally, but if I was to trade this conventionally, I'd be looking at 382 retracement, target 1s, 618 for target 2s. Now, one thing I do know is when we break out of these patterns, the middle of this wedge becomes very strong, a very strong level of support. If we was to break to the upside and pull back down into this level, I'd be mindful of taking targets anywhere beyond this point, unless I'd tested, obviously, different target levels. But usually we see this level become a decent level of support, and we see a bounce off of that level. So there's one Gartley pattern up there, 147.04. And if you're looking at a longer term trade, there's a huge bat pattern down here at 127.49. Okay, that's a long way off, but I'll bring it to your attention whilst we're on the daily time frames. Okay, so I want to drop down the time frame and share with you a couple of opportunities that may complete before this pattern that will allow us to get involved in another high probability trading opportunity down on the 240 chart. So if we drop down to the 240, alright, so we've dropped down to the 240. I'm going to share with you some more opportunities here, and then we're going to work our way down to the 60, and then I'm going to work back to show you why it's important to stick to your plan if any of these trades lose, and you can still come away with a decent profit. So the next trade I'm going to show you here in this consolidation zone is a Gartley pattern up at 143.97. So we're looking at X to A to B, B to C, and a Gartley completion up at 143.97. Okay, so we have our Gartley pattern completion up at 143.97, and if market pushes down, then we've also got a Gartley pattern down, a bullish Gartley down at 138.77. Now that means that if market breaks out to the upside, we know there's a high probability of a breakout, right? So if market breaks out to the upside, we know we've got a high probability trading opportunity up at 143.97. Okay? Now, if market pushes down and breaks to the downside, then we've got another bullish Gartley down here at 138.77. Okay, so let's bring that on, 138.77. So if market breaks to the upside, we've got a high probability trading opportunity waiting for us here. If market breaks to the downside, we've got a high probability trading opportunity right here. Okay, and we know that these patterns have got a 60 to 70% win rate. All right, so market breaks up, we're getting involved. If market breaks down, we're getting involved. Now let's drop down to the 60-minute time frame, where I want to share with you another couple of opportunities that may complete before. Okay, so I'm going to leave all of these trades on here to show you how much opportunity is in this zone. Now, if market was to break down, we know we're looking at this this pattern down here at 138.77, but before then, what if we get an opportunity before then? Well, I can tell you that we've got another Gartley pattern here down at X to A to B, B to C, and a CD completion down at 140.06. Okay, so we've got another bullish Gartley pattern here at 140.06. That means that if price action does push down on the open and we see a breakdown to this level, we can get involved in this Gartley pattern first. It doesn't mean that we can't take both. If we're setting conventional targets, there's a chance that we could hit targets and then we can push down, fill the bigger Gartley and take that as well. Okay, but what if you take this Gartley pattern and you've got stops below X and you get stopped out? Okay, well, let me explain to you the importance of sticking to the plan here, because if we bring on our fib retracement tools, say we've got conventional targets on this bigger pattern set at the 382 and the 618 retracement. Okay, now let's say, for instance, that our stop loss on this smaller Gartley is down here at 139.25. Now we know that if we're to get stopped out of this, we're going to be entering at 140.06, okay? 140.06, and say we get stopped out around 139.25. Okay, that's an 80 pip loss. That's an 80 pip loss. Now, what most traders will do is they'll say, oh no, I've been stopped out. I've taken 80 pips of loss here. and price action's continuing to push down, I'm not sure whether I should buy again, and they let their emotions take over their trading decisions, over their trade plan. Now, let me demonstrate something for you. If we took this pattern and took a loss, bearing in mind this is a high probability pattern, there's over a 60% chance of this being right. If we took a loss on this, and then we were to enter the bigger pattern down here, if we then get filled the bigger pattern and that hits targets, and we're entering at 138.77 and our target ones is at 140.31, we stand to make 154 pips. So that means an 80 pip loss for the sake of gaining another 154 pips. That means you're going to walk away with a 74 pip profit. Okay, so I'm going to clear some of this stuff off and give you a couple more opportunities in a bullish direction. So the first pattern that I'm going to bring to your attention is our Gartley pattern up at 142.70, and that's a X to A to B, B to C, and a CD completion up at 142.70s. Another Gartley pattern. I'll colour this one in gold so it makes it all nice and clear. You can really start to see how frequent these things form and all of the opportunity that we're presented with on this pair, which means there's a very high chance, because of the breakout, that we're going to earn some money out of this. Okay, so we've got a Gartley pattern completion up here at 142.70, but before that, here's one for you guys to look out for on the open. We've got another Gartley at X to A to B, B to C, B to C, and a CD completion. This actually completes at 141.78. So this is one to pay attention to on the open. Okay, so if we get involved in this, stops will need to go above X. Again, there's a chance that you may get stopped out. Let's run through the probabilities and the profit of being stopped out of this first trade and taking the bigger trade in a bullish direction as well. Okay, so if we were to enter at 141.78 and get stopped out at 142.30 because our stops are above X, we stand to lose 52 pips. Okay, then if price action continues to rise and we get filled the bigger pattern up here at 142.70, just by taking target ones, we stand to make 118 pips. Now 118 pips take away 52 is going to leave us with a 66 pip profit. Okay, now obviously there's the chance that you might enter both trades and lose on both trades, and we never know how many winning trades we're going to get in a row or how many losing trades we're going to get in a row. But I just want to demonstrate to you, it's all about the probabilities. Okay, we've tested these patterns, we know the probability, we know the percentage that they're right, we know the maximum losing drawdown over the last 5 years of historical sampling, so we know the probabilities of these patterns being right. So that means that when they present themselves, we want to get involved with as many of them as we can. And it's essential that you don't, break your rules, move your stops, or stop trading when you take a loss. And hopefully that demonstrates why. Okay, so by taking these trades and getting stopped out, you can get involved in the next trade and still walk away with a winning trade. All right, so hopefully, guys, that gives you some opportunities to look at this week. My charts look like my kids have drawn all over them. Perhaps I should get some kind of Crayola, some Crayola tool and let the kids draw all over my chart so it looks like a real mess. But hopefully it's clear enough for you guys to see, and good luck in the markets next week, and I'll see you in the live room. Alright guys, so that was it for this week's Forex market preview video. Hopefully you enjoyed that. Lots and lots of trading opportunities there on the pound yen, and really I hope you get to see that it's not always about being in a trade, it's about allowing those high probability trade setups to complete before involving yourself in the market and being consistent and disciplined enough to stay out of trading for the sake of it. Now, if you're interested in learning how to trade these advanced patterns, then we offer a course on how to do so. I'll put the link below this video. And also, if you're interested in the live rooms, we have 2 live rooms, one on the New York session and one on the London session. New York session's hosted by Akil Stokes and the London session's hosted by yours truly. And it runs from Tuesday to Friday, 8 AM to 11 AM local time. So the link's below. If you're interested in that, you can come in for a free week. And also, don't forget to stick around on this channel. There's lots of other videos that you can check out. Tons and tons and hundreds of hours of valuable information. And until next week, good luck in the markets, and I'll see you then.